A bear market sounds very sexy during the bull market. So everybody's up like 5, 10, 20, 30, 40x on their money. And everybody is talking about the cycles. They're going to sell at the peak of the bull market and then wait for the bear market, buy the bottom, and then ride it back up. And as we can see, it generally doesn't work out that way. Like if you weren't in crypto during the 2018 to 2020 bear market, you probably bought too late and you probably waited too long before you sold, or just didn't sell at all and are still waiting for higher highs. So you had all your plans to, exit on the top and you'll be sitting on cash, and then you'll buy Hex at 10 cents, at 9 cents, at 8 cents. And it sounded so romantic. But now that we're there and we see the uncertainty in the tight monetary policy, it's not that easy. Everyone's calling for 2 cent Hex, 1 cent Hex, half a cent Hex. And you're thinking, oh yeah, so if I buy now, I'm not going to have any cash for those better prices. So I'm just going to sit and wait. I guess the best way to put it would be, it's not as easy as it looks. When you are at a position of strength, which most people are at during the bull market, looking towards those times where evaluations are going to go down considerably, which everyone was calling for, is romantic. Once you're in it and it didn't play out as you expected, which it usually never does, it's tough. It's tough and we're all feeling it. The most important thing is to know that it is a bear market, to accept it. Valuations are down considerably, right? Bitcoin already crashed 70, 75%, Ethereum 80%, may go lower. People are certainly calling for it. I know Jim Cramer's calling for 12,000. The point is, this is the bear market. Know that it is here now. Next is you want to prepare for the unexpected. Even if they were calling for 100K Bitcoin, the people that took profits because they accepted, hey, look, we're in this massive euphoria. I have a lot of money right now. Maybe I should sell some, and put it away. Those people prepared for the unexpected and they're sitting at a solid position now. They're likely sitting at a solid position. Traders who obviously are very silly for trading. I think trading is very stupid, but they always talk about the different scenarios that could play out, and to be prepared, you can prepare for both scenarios. If you have income, you can dollar cost average, and you could also make sure that you have cash in order to take care of yourself and to buy the things you need and spend money on the things that are important to you, because things generally do not play out how you expect it to play out. So if it plays out the way that you want it to, then that's awesome. But if it doesn't, at least, you're prepared. You're in a good position. So you should have a personal strategy and a portfolio strategy. So the personal strategy is like how you're going to spend your time, how you are going to make money, how you are going to take care of your personal needs. And then you have your portfolio strategy, meaning what you are going to invest in and the time frame in which you are going to invest it. Okay, so let's talk about the personal strategy. Most important thing is don't stare at the charts. Why? When you look at the charts, you are wasting your time that could otherwise be getting you somewhere. It could be getting you a good job that you could be earning money, or it could be getting you to start a business. So looking at the charts is not going to change anything. It's not going to bring these things that you are expecting any faster. And it will also waste your time that could have been spent otherwise doing better things that can get you in a better position. So instead of looking at the charts, what are you going to do? You should work on yourself. And working on yourself would vary depending on who you are as a person and what you're doing in life. If you're in high school, then you should be working on your grades. And if you graduated, then you should be going to college. That is the safest assurance that you are going to earn a 6-figure salary by the time you're in your late 20s and early 30s. And that is huge. If you graduated, then you should be working, you should be generating income so you can best position yourself and you can take care of yourself financially. While yes, we strongly believe in the Richard Heart ecosystem, meaning Hex, Pulsechain, and PulseX, and that it is going to get us life-changing return, when that happens is something that we can't control. Following the dot-com bubble, which is probably the greatest historical comparison to the bull market that we just went through in crypto, the NASDAQ didn't make a new all-time high for 10 years. While I don't believe it is likely that it is going to take 10 years for a new all-time high in crypto, it is certainly possible. And people that say, oh yeah, the Bitcoin halvening, well, let me tell you something. We are in an environment where the Fed is tightening, and if the Fed decides to be risk off for the next decade, which is possible, although unlikely in my opinion, I don't see a scenario in which Bitcoin will be making all-time highs. I can see a run up maybe to 30, 40,000 following the halvening, but if the interest rates are high and all the other growth sectors aren't doing well, I do not see crypto doing well. I don't see crypto decorrelating anytime soon. While Hex isn't necessarily directly correlated because people say it was making all-time highs when Bitcoin was at 30,000. That was still during a time of loose monetary policy. The interest rates were not being raised and the tapering had not even started yet. So even though Hex may be decorrelated because it's only 20% tied to Ethereum and liquidity pairs, I still don't see a scenario where it will be making all-time highs when interest rates are at like 10, 20-year highs. I mean, think about you buying Hex during the bull market. You probably had a lot of money from your previous investments in stocks and crypto that you're able to drop into it. And that's part of what drove it up so much. And I just don't see that happening now. Right now, you know, all our investments are down considerably, even if you're in like safe things like index funds and things like that. So it's possible, but it is not likely. And you should not take it as a given that Hex, Pulsechain, or PulseX will be making 100, 200, 1000 X's when we're in a tight monetary policy where growth companies are getting wrecked. So you should be prepared for that. And being prepared for that means working, you know, earning money either through your job or your business. If you're not generating income that you could live off, you are going to have to sell when the prices go up. And if you have to sell a considerable amount, you will lose a lot of exposure to your fastest appreciating assets. So if you are able to generate cash now to live on, when evaluations go higher, you are not going to have to be staring at the charts the entire time trying to time the market so you could cash out. Not saying you shouldn't take profits, but you don't want to have to sell a considerable amount of your bag in order to achieve these life-changing gains. And the best way to be in that position where you don't have to sell a considerable amount of your bag is by earning money. So don't leave your future in the hands of the Fed. Get yourself a job or degree so that you can get a job where you're going to be earning a solid living and you don't have to bank on the Fed slashing interest rates so your bag could go to the moon. Work on things that you can control. You can't control the interest rates, but you can control how much money you earn by getting a degree or by getting a good job or by starting a good business. That's what you want to do now so you can buy the things that you need personally and so you could invest in good projects that do well over time. What should be your portfolio strategy? What should be your investment strategy? And obviously, none of this is financial advice because I don't know your personal situation and I'm not a financial advisor. You are going to have to decide what's best for you. So cash. What should your cash position be? Well, what is cash for? Cash is used to buy things. So you have to look at your expenses. You have to see how much it costs to pay for your food, for your rent, for your clothing, those kind of things. Also for, you know, your vacations that you're going to want to be taking and things like that. So you should have enough cash to take care of yourself for at least a year. That if, God forbid, you lose your job and you have no more income or your business is not doing well, you can still take care of yourself and be able to find some other means of earning income without having to worry about putting food on the table and buying clothing and paying rent and things like that. Should you save cash for when there are lower valuations, you know, when the price goes lower? In my opinion, obviously not financial advice, absolutely not. And the reason for that is because that is timing the market. And we all know, as Richard Hart says, time in the market beats time in the market. If you are in a cash position and you are waiting for prices to go lower, they might never go lower and you might not catch that bottom that you think you're going to get. So you're basically gambling on your future, and gambling on your future is not good. You should be dollar cost averaging. You shouldn't put all your money in at once, especially in cryptocurrency, because cryptos are volatile. Protect yourself from risk to the downside and to the upside. Decide how much money you want to invest in it and then spread that out over a couple months. And once all that's in, from your income, you should DCA, in my opinion, obviously not financial advice. The same way people get greedy and don't sell when they're in a lot of profits, people get greedy and they don't buy during the bear market when valuations are down. And obviously we know we're in a bear market. We don't know how long it's going to last, but we obviously believe in Hex and Pulsechain and PulseX. So we should not be greedy and we should dollar cost average. There's a big question people ask about diversification and should they diversify? And the answer is, to an extent, obviously not financial advice. The only diversification I believe in is putting money into your Roth or your IRA, depending on what's better for your personal situation. But your Roth is tax-free. The returns that you get on it, you don't have capital gains. And even though we believe in Hex and Pulsechain and PulseX, they are still cryptocurrencies and they are subject to various risks like regulation, but also you have personal risks, and someone could get their hands on your seed phrase, or you could get hacked and things like that. So I don't think it is good to put your entire future into crypto. You should at the very least max out your Roth IRA every year of $6,000 just to ensure that you will have money for your retirement, which is very important. That would be the only diversification, I believe, and not financial advice, but I would not actively invest because that takes away your time that could be used doing other things like starting a business or working, earning money. Generally, people that actively invest and try and pick stocks and things like that, they underperform the S&P 500. So the best thing to do would be to buy index funds like the S&P 500, like the Vanguard Total World Market. Not financial advice, do your own research. But that should be the only diversification, in my opinion, because I believe in the Richard Hart ecosystem, and I believe that it is going to give you astronomical returns. Not financial advice, do your own research. Now you might say, oh yeah, but if I invest the $6,000, which is $500 a month on my Roth IRA, you're not going to have any money to buy Hex and Pulsechain and PulseX. Well, if that's the case, that you're not going to have money to invest in cryptocurrencies, you should be working harder if you're young. I mean, if that means that you need to take that weekend job at Walmart or McDonald's just to earn that excess cash or work overnights, now is the time to do it. This is the bear market. This is the time where you have to hunker down and get serious to ensure that you will get the most out of those parabolic returns when the bull market comes. We all know markets are going to come back, and when markets come back, good projects will do extremely, extremely well. And if you're watching this, you probably are convinced that Hex, Pulsechain, and PulseX are excellent projects, and they will come back when the markets come back. Although it might take 2, 3, 4, even 10 years, eventually when inflation comes down, or if we go into a serious recession, the Feds are likely going to slash interest rates and send these assets to the moon. So what should you be doing? Not financial advice. You should be buying Hex now. It's down 93%. Now is not the time to get greedy. If you buy it now, you are going to have the Hex that you bought. You are going to have the interest that you are going to accrue from staking, and you're going to have all that copied over onto the Pulse chain. So now is an excellent opportunity to buy Hex. You also want to set aside money for Pulsechain and PulseX, which in my opinion, not financial advice. The best way to do that would be to buy stable coins. So allocate what you want to buy in Pulse and PulseX, depending on what your position is going to be at launch. And then once Pulsechain launches, you want to dump those copied over PRC20 stable coins that you have into Pulsechain and PulseX. And then you want to bridge in that Ethereum ERC20 stable coins into Pulsechain and just dollar cost average into that. So you should be getting your Hex position now if it's not up to par on how you want it, because it's a great time to buy. And you should also have that money set aside for Pulsechain and PulseX. Once it launches, you should buy accordingly. Not financial advice, do your own research. So to summarize, the bear market is here, ladies and gentlemen. Don't know how long it's going to last. You don't know where prices are going to go, but the bear market is the time to buy. Buy during the bear market so we can have those astronomical returns during the bull market. Work on yourself, meaning get a degree, start a business, or get a job that could earn you money. Work those overnight shifts, work on those weekends if you have to, so you can earn money to invest in those assets that you think are going to do well over long periods of time. Do not waste your time looking at charts, because looking at charts is not going to change anything. That is not a variable you could control. And during the time that you'd be wasting looking at charts, you could be earning money. With the money you earn, obviously, set aside what you need, at least enough to take care of yourself for a year if something happens to you. Max out your IRA and dollar cost average into Hex, Pulsechain, and PulseX. Now's the time to hunker down. Do not wait for certain valuations, because that is gambling. That is trading. There are way better ways, there are way sexier ways to gamble your money than to try and time the crypto markets. If you believe an asset is going to do well over time, you should be dollar cost averaging to protect yourself against the volatility and the risk, but you should always be buying during the bear market and not waiting for bottoms and tops. Thank you for watching. Remember to hit the like button, subscribe, and leave a comment. If you have something you want me to talk about, make sure you leave it in the comments, or better yet, tag me on Twitter and ask your question or say your comment. If it's good, obviously I'm going to talk about it in my future videos. If you leave it in the comments, that's great, but I'd like it a lot better if you leave your comment on Twitter. I'm not getting much engagement there. I like to use it more, but in order to use it, I need engagement. So make sure that you like, subscribe, comment, and follow me on Twitter. Tag me with your questions, and it might be in the next video. Thank you.